Great. So everyone, I welcome you everyone to this phenomenal trading call that we have prepared with absolutely phenomenal trading team from Cyprus. Here, Alex Morrison is with us today. Alex, maybe you can just say hello that the guys and that the ladies and gentlemen can hear you. Okay. Yeah, that's live. Alex, are you with us? Can you hear us?
Listen. Yes, I'm going to share my chart on my laptop, and I'm using Zoom on my iPhone, so we can get something done.
Okay, now it's working. Great.
Okay.
So, ladies and gentlemen, this is Alex Morrison. I think he can also in a few seconds tell you some words about his story, about his self as a person, and that you can get a clear view. This call actually we make because we want to show you how trading works when you work with professional teams. Because a lot of people are asking us, guys, how are you trading? What is your strategy? Who are the traders behind VCI? Who are managing some accounts of you? Who are managing the funds? And this is very, very important because a lot of things are happening in a forex market, future trading market. The trading market is as itself, and we are just on focusing on transparency. That's the most important thing.
That's a very good word to use. MLM in the financial markets, in the financial world is not such a new thing, let's say. And of course, when you're talking about such a large amount of clients that you guys are bringing in, it's not doing a little bit of a copy trading situation where 2-3 accounts are added. You're talking about hundreds and thousands of accounts. So from that perspective, of course, transparency is extremely important, the most vital thing. So there are let's say my FX book links, which are connected to the main masters, which clients can see you on a second by second, minute by minute basis. Of course, at the same time, whatever trades are being placed by any of the traders on the team, the accounts, because they are segregated, so because the accounts are staying on the client's names, of course, no one has access to those particular accounts. The trades get placed on the master, and of course, according to the equity of each account, the trades get split according to the equity, and as I said, in each account. Because it's their account, of course, their personal account, they're able to see their live trades. Whenever they open their platform, they see their trades there, their stop loss, take profit ratios. They can pull out reports, they can sue, but everything is in their power. From that perspective. So we made sure the transparency was in play from the get-go.
Okay, great. Yeah, maybe Alex, you just hooked up directly on the thing transparency, which is a very good sign. Maybe you can tell the people something about you. How long are you trading? What is your experience?
Absolutely. Yeah, of course. Absolutely. I've been in the markets for a little over a decade now. I've tried, I don't know if there's any traders out there. I've tried many strategies to begin with. Bottom line remains that the only thing that works is microeconomics, supply and demand imbalance trading, which is an institutional trading strategy used by most banks, institutions, hedge funds, and so on and so forth. So to make a long story short, for the last 10 years or so, I've been trading supply and demand. I'm proud to say that I have also my main business is a commodity. It's a commodity hedge fund where we apply this proprietary trading strategy based on macro trading on mostly commodities. So we short the CFD market whilst we purchase the physical commodities. And basically we're using the exact same ratio. It's a strategy, by the way, which is it's not a scalping nor we don't do scalping or anything that has to do with second by second trading. We do not have any algo, let's say robots or whatnot. We're trying to develop one according to the strategies that we've got, but we're not there yet. Nonetheless, so back to supply and demand, it's a longer term trading strategy, which gives you entries on a daily, weekly, monthly, and so on basis. So if just a basic definition, because everybody studied economics in high school, if we remember, right? What is it? What is supply and demand? And why do I choose not to trade using indicators, lagging indicators as such? And I choose to simply use price action supply and demand ratios. bottom line remains that supply and demand is indeed a macroeconomical model of price determination in any market, right? It stands behind the point that in any competitive market, such as the stock market, foreign exchange, crypto market, commodities, real estate, nails and milk, any competitive market, the unit price of a good will vary, right? Up and down, up to a moment, most importantly, a pricing time in which the quantity supplied by producers pretty much equals the quantity demanded by consumers. And that's when we find ourselves, as they call it, in an economical equilibrium in price and quantity. These particular ratios, taken into consideration past data of institutions where they had certain very big orders to get filled in, the reason I say that is that I also check certain commitment of trading reports, which are being printed by the CFTC on a weekly basis, right? So knowing all these things, we are able to take advantage of continuation and, of course, turning points into the market based on pending orders. So what you will see from a supply and demand perspective, you won't see a lot of, oh my God, the Euro USD is going up, click, I buy it, and whatever. It's more of a pending orders situation. If price comes to a certain level, I'll show you on the screen for a few minutes, just to understand what I mean. Then a certain order will get triggered on a certain risk reward ratio, and the market will take its course. On the other hand, we have, unfortunately, Stefanos, the other trader, is in Vietnam. There's a big time difference, about 11 p.m. He couldn't join us. He's definitely going to be here next time. What he does, in order for us to be able to cater to all appetites, right? Because you guys are, before you start on board, of course, you're going to be deciding on a certain risk appetite that you guys have, as they call it, a maximal drawdown amount. So an amount in which you guys are comfortable looking into releasing onto the markets, right? From a risk perspective. So what I do is supply and demand slightly longer term perspective, gathering profits on a longer term basis with a slightly less accumulative risk, right? And what Stefanos does is, again, not scalping, of course, but a swing trade, a little bit more of a short term perspective, using a lot of fundamentals, like economical reports, geopolitical reports, and so on and so forth. So he's guiding himself a lot according to the news, and also certain technical indicators, such as moving average convergence, divergence, Bollinger Bands, RSI, and so on. It's something that he could, of course, talk in much more depth about, simply because I use no indicators on my charts. But he's looking at accumulating, let's say, as you call it, volume, in order for, because it's a multi-level marketing system, in order for your downline to be catered to in regards to their commissions. And a slightly longer term perspective, so we can, of course, gather the P&L in regards to the end client to be happy in the long run. And that's pretty much it in a nutshell. Okay.
We have, of course, we have also some, let's say, newbies here in our community, which I'm not sure I have understood what you all actually are talking about, to be honest. But I just summarize a little bit. So you are using a mixed strategy that you have learned from institutional side, right? So that means that
supply and demand is something that's used mostly by institutions. It's a longer term strategy, so you require a larger account in order for you to be able to look at the markets from a very different perspective. I'll just show you how. And as I said, high frequency is a bit more of a shorter term perspective. Again, we are witnessing swing trades. There's trades that go on for days, of course, from his side as well. But we try to accumulate slightly more volume from that perspective. So a little bit more trades placed on a monthly basis on a slightly lower risk reward ratio, for us to be able to cater to the upline or downline. I don't know how you guys call it. It's not my thing.
Yes, there are both things are there, uplines and downlines. So just for our community also to understand, you at the moment you, I think, also managing some hedge funds by yourself, right?
Yeah, I have my own. As I said before, we're basically a commodity-based hedge fund. Most of our equity is going into physical commodities and CFDs. So we hedge ourselves by selling the futures contracts as CFDs, and buying the physical assets through bullion houses. And also around 40% of our equity is pretty much traded throughout a macro perspective on supply and demand, stocks, shares, equities, as I said, indices, bonds, and so on and so forth, as futures contracts. And basically I use the same exact strategies as we use there, pretty much here. I look into the same perspective, but of course from a very different point of view.
Okay, but I guess that's also it's a very, very important message that you have just the experience, and you do it still live, managing accounts for institutional clients, because I associate for myself that if someone is able to make it on a professional high level, like trading for institutionals, then it's also a good sign. Then I know that I can, let's say, I can trust him. Of course, there is still a risk, but I know that my money is in good hands.
Of course, absolutely. It's very important for you. It's very important. It's very important for you guys to understand, for you to see. Of course, there's always a test period. That's how I do business, regardless of how it is. So it's very important that you guys feel and you see exactly how it is. Of course, we do a couple of videos. Most importantly, we kind of make you understand what kind of trade we place and how we look at the markets from a perspective, in order for you to be able to present that a little further. And once all the ticks or all the boxes get ticked, then, it's just a leap. And we just pretty much get going. It's a very fast system. So from that perspective, absolutely.
Okay, great. Can you, if you want, you can maybe show us some things about statistics, about the performance?
Yeah, absolutely. Let me, I will get off here and I will join from my laptop so I can actually share my screen with you guys. Just give me a quick second.
Great. So I just focusing a little bit on the chat, because maybe you guys, I think everyone who attends this call now, there were some who, Bernard has written here also, I like English, but French is a good language also. When Europe speak, I can understand with Alex. It's like an American movie with Gary Cooper. Yeah, actually, I'm definitely on your side. It's high level English that he's talking with us. I hope that everybody gets him. I hope very, very, very that everybody gets him. But if not, we have still the recording, so don't worry at all. You will be able to watch the recording maybe in a light slower speed, and then you get it definitely. In this period, it's very important that you guys see just that we are working with professional trading teams. In the next call that we will prepare also maybe already in the next 2 weeks, Stefanos, his partner, will also attend. Then you can maybe see both sides of trading, from Stefanos and again from Alex. Showing.
Hi guys, I'm back.
Okay, great. You're here. And that's the important thing, that you see that we are working here with professional parties that are involved in the scene very long and managing big funds. That's just the message, should be the message of the call. Of course, if you want to go deeper, we are an educational platform, so that we will provide you some facts about what is a swing trades which are going about longer period. What is scalping? Scalping is called maybe the trading part that is going on daily basis. That's why scalping, like tuck. There is the expression of scalping comes from. Just a few words about that. And now Alex is also showing us some of the strategy about.
All right, give me a quick second. Let me know if you can see the screen in about 2 seconds.
Mm-hmm. Yes.
Can you see it now?
Yes.
Yeah. Awesome. Okay. Cool. So, very long story short, I'll give you a very simple example. I know that you'll see a lot of rectangles. I heard you, by the way, Adrian, talking about scalping. Scalping is definitely something that we're not doing. Scalping is something that you're going, when you said tuck, that's literally what it means, right? It's literally in and out. We don't really do that. Well, we never do that really. We, especially Stefanos on the shorter term perspective, he's looking into shorter time frame trades. I'll give you an example of a trade that Steph just took. Give me a second, and then you'll understand what kind of a trade we're talking about. So, for example, gold here, right? This is a chart of gold. What Stefanos did, for example, he has taken throughout yesterday, and he pretty much closed this trade. He has taken trade on I'm looking on a next daily chart, looking on a 4-hour chart, which every candlestick represents 4 hours, right? He's taken
Eugene, can you please mute the microphone? Guys, give me a second here. Gustav and some others, please mute your microphone. You can do that, Eugene. Yeah,
you can mute them yourself.
I'm just looking.
Cool. Okay. Take your time. All right. So as I was saying, what Stefanos did basically was a very short-term trade. He sold for whatever reason he's going to go into that strategy. Probably he had an RSI signal or whatever or not. So he sold for a very short period of time, made a few good bucks, and that is it. Then I'll give you an example of a trade that we've taken on supply and demand, for example. I won't get into detail, but to make a long story short, in order for a supply and demand trade to be placed, we need to look at 3 different time frames. We either look at monthly, weekly, and daily, and we get a certain type of an entry. Or if you want to look into a slightly shorter time frame perspective, we're looking for a weekly, daily, and a 4-hour. And it's very, very important, weekly or the highest time frame, either monthly or weekly, depending on the sequence that you look into. That particular sequence dictates the direction of your trade. So you have 6 different types of entries. If you guys want to know a little bit more about supply and demand, you can also go to my YouTube channel, and you'll get a lot of videos there. You'll understand much more in depth what exactly it is. To make a long story short, there are 6 different entries, of course, 3 types to the upside, 3 types to the downside, depending on the actual ratio. So I'll give you an example of a trade that we placed on gold, which was this trade. We have sold here and we have sold here. Okay, of course, it's taken me quite a while, considering that this is a weekly chart and each candlestick represents a week. We have entered here, so we're looking at 1, 2, 3, 4, 5, 6, 7, 8, about 9 weeks of trading here on a supply and demand trade. And the reason that the trade was taken was exactly on these particular ratios. Monthly told me that a certain institutional supply zone would be in control at that moment in time, which was this particular one. Weekly was also telling me that a certain institutional supply zone was in control, which was this one here. And I had a entry on a daily supply zone, which were these 2 here. And we basically rode the market all the way down. By the time our targets were hit here, and the reason, by the way, the reason that we have targeted there was because, if I delete this weekly demand, was that before this happened, here, this rally-based rally, by the way, we have when we talking demand, we have rally-based rally, which is a rally, a base, and a rally. The market comes back, fills in orders, and leaves. Or we have a drop, a base, and a rally. When the markets come back, fills in orders, and leaves. So in this case, when we sold here, our first target was right here, considering that here was an institutional demand zone. Right? When we drop in onto a daily chart, when this zone was actually broken as well, we were able to take another short, for example, on that particular supply, hunting the next zone of demand. Considering that this is now taken out, this was a fresh demand, so could sold there, take it here. So this is pretty much what we do I wanted to show you an example of 2 trades that we placed on the same exact asset. So Steph would make a big buck here in a very short amount of time. So if I look at how long he was, he entered here, let's say, must have closed it there, about 155 pips. That's 4, 8, 12, 4, 8, 12, that's 24. So that's a day and a bit that he was stuck in the trade. But I know that he didn't pass the day. He actually closed this trade. I am 100%. So he must have been somewhere here. Because actually, let me see, because I remember there was a 4-hour rally-based rally. So rally-based rally, it means that he must have closed this trade around here, not here, because I remember he closed it before the market opened, before the market closed yesterday. So let's say it was about 186 pips, and it took him 4, 8, 12, let's say 12 hours on the trade, whilst a trade that we would be taking on a supply and demand, which was here, took us 9 weeks to complete. And that's the difference between one and the other. In regards to our my effects book, let me just try to.
Here is one, Alex. Here is one. Yeah, let's say newbie question by Peter. He's asking, who is paying these profits? If we make profit on a trade, somebody else can lose on this trade. I just wrote him, yes, that's how the market works.
Well, actually, that's part of. Let me tell you a quick story. That's part of why I started trading. As a matter of fact, I had friends. That I had a friend, particularly. His dad was a stock trader, and I have to admit that I was quite caught up with the lifestyle and everything and the money. Let's be frank, right? Because that's the reason that everybody gets in. And I was studying shipping law. I was just about to go to college to study shipping law. Long story short, I put in pretty much all my college tuition fund in an account, blew it in about 2.5 weeks.
Wow.
And that question that the gentleman just asked, when I lost that money, I mean, someone actually made it, right? So it became an obsession. Luckily for me, and not everybody's lucky. Luckily for me, I got introduced to a bank trader, and the rest is history. I understood that how institutions trade, how banks trade. In the end of the day, the only reason that the price in the market goes up and down is because big orders, right? Large orders. I mean, Jim and Jones, or even myself, Alex, whatever the account you've got, be it 100 grand, be it 300 grand, whatever the size of your trade would be, you wouldn't really impact the market in any way, shape, or form, right? You're just a little drop in a humongous abyss ocean. So the only way for you to be able to, the only reason the market actually moves is because of institutional orders. Banks orders through banks, right? Let's say Barclays sells and I don't know, JP buys, whoever it may be. As long as you understand what Barclays and JP does, and you know where they have interest of selling or buying a certain asset. So when there's supply, when there's large amounts of supply, liquidity coming into the market, or there's large amounts of demand because of any reason, of course, it's great for any trader, regardless of the size of your account. So if you have, let's say, $5,000 in your account, but you look into not making a buck overnight and thinking that you're going to be making, I don't know, doubling your account in a matter of a week, like people think that it would, then absolutely, it's the best way of going around. But it takes a lot of dedication, passion, to do it on your own, and of course, you definitely need to enjoy it. It definitely needs to be a passion. But again, the ice in the sleeve that we're looking into is our combined strategy between institutional strategy with in a sense retail, more of a retail trading strategy, right?
Mm-hmm. Okay, I got it. And you also shown in your statistics that the trades that you are doing, they are not only going about a day or maybe a week, they are going maybe, depends on the news that you are reading out from the chart or from the news, that a trade can even go over some weeks, right?
Oh, absolutely. As I said, this particular gold trade went not for 9, but it went definitely for 6.5 by the time it reached my weekly demand zone, right? Mm-hmm. So yes, we do. As I said, we do have a longer term perspective through the supply and demand imbalance trades as well.
Yeah, I'm just asking, and I'm very enjoying that you're showing such long-term trades, because there are also some people maybe on Facebook or different social media platforms that are posting and showing some accounts and saying, hey, hook up, I'm the best trader in Forex, the best trader here. And they are showing like, look what I made today. And just what I made today, of course, if you made today one.
Listen, absolutely. Everybody wants, I understand that. I understand from the perspective of look what I do today, because it depends on the reason. I saw a lot of people, of course, out there, and I saw a lot of people that are involved in this multi-level marketing thing. And I know that a lot of people are posting their results in order for them to accumulate traffic and to have people, of course, follow them and join them.
Yeah, that's
but any reputable investor and any individual that's able to take his own decision in regards to trading, it's of course very important to understand at least a little bit what he's getting himself into, right? And most importantly is to look, the way I look at my investments is on quarterly, forget about year on year, but that's of course a must, but I look on a quarterly basis. So in regards to any retail traders, even in an MLM, let's say, which is a little bit of a shorter term perspective, he has to look on his P&L and on the profits from a month on month perspective. That's the most important thing in order for you to take a decision in regards to staying into the system or not.
Correct. Yeah.
That's very, very important. This is the master. In regards to, we started this was a testing period. We had another master, which Steph will show you next time. We started trading this in April. These are our results. April. Basically, we looked at a 5.4%. We looked at a little bit under 20 last month, and we have a really good start of the month now on 5.8. We have a lot of trades running at the moment as well. At the same time.
Can you just repeat? You start this master. You started in April, and what is the profit so far? I didn't get you.
We had the first amounts of deposits. They came in here, but it was very, very small amount. This was a testing period, so the actual MLM structure came from here. We're looking at, as I said, it was a 5.4 here. Give me a second because I don't have my. Sorry, it's a 9.4 here, a little under 20% last month, and we had a good start of the month, a bit under 6% so far this month. We didn't have trades running throughout the entire month, so we had a good start of the month. We're projecting pretty much 18 to 20 as last month as well, right. With a very small maximum drawdown. As a matter of fact, it's a very important factor.
Definitely.
Give me a second. Right, so quick second. So gross profit last month was around 78,000. Commissions paid out. P&L net profit was 66 accumulated. But the important.
Alex, the screen is gray.
Oh, let me know when you can see it.
There's just nothing at the moment.
Give me a quick second. Because I understand exactly what you mean.
Do you have maybe during the time that it's loading? What is your, let's say, your average profit for the last 1, 2, 3 years, something like that?
Able to see. Me personally, I've been averaging between 37 to 47% a year. From a long-term perspective, but again, it's not an MLM thing. It is a very different way of trading. As I said, we remain hedged in regards to futures, physical assets. So it's a very, very different thing. Can you see it now, by the way?
Yes.
Right. So as I was saying, give me a quick second. So it was 78 gross throughout the last month, minus our commissions. The net was around 66. But the important number, of course, it's a great amount, 20% almost. But the important number is the maximal drawdown, which is the risk we have undertaken throughout the entire month. So we have achieved 66,000 in profits by risking 2.14%, so 2.1% maximal drawdown risk. So that is the number that whoever would be coming in would like to see. Because if I told you that I risk 50,000 to make this, wouldn't really be impressed. But if looking at risking 7 to make that number, then of course the thing is obviously a very different perspective.
It's very good drawdown, yeah, very good. Great,
right? So it's very important. We keep our risk reward ratios in check on a weekly basis. And again, as I mentioned at the beginning of our conversation, you guys, of course, choose your risk appetite in regards to the trading experience. So from that perspective, you put a number down, and we make sure that from a risk reward perspective, we won't be able to undertake any more risk than what is written on the paper.
Great. Yeah, I think in the next call I tried to hook up Vladimir on this call, but unfortunately he's in a similar situation as Stefanos is. In fact, he couldn't attend to this call right now because he is very busy and also in a different time zone. And for the next time, we also will prepare the accounts that you manage for us, that you can show some statistics so far, that the people can see, hey, these accounts are managed by Alex and by Stefanos.
Yeah, absolutely. Yeah. I was thinking the best thing you guys should do, because of course it's a very just started. At the end of this month, we should have another little webinar thing, and present that account.
Yeah, that definitely we do. So, and what is also interesting for our attendees is they know that we are actually trading with different teams on different brokers, and with you we are trading on FXB on the broker on FXB broker. Why FXB is a cool broker?
More than fair. For me personally, because I'm the trader, I don't work with FXB. They don't. The accounts are not managed by them. But the reason the broker was chosen is in regards to its execution, and in regards to how we got introduced to the MLM project. First of all, it's a full STP broker, so that's obviously for us and for the MLM very, very important, so that the trades go straight through to the liquidity provider. Mm-hmm. We in tremendous tests before that, and the trade execution in regards to the masters, they're in the nanoseconds, so there is absolutely no delay in any way, shape, or form. And of course, even more important for me as a trader, not that it's more important than execution nonetheless, but even more important is the spreads. I know that a lot of brokers out there, they throw a lot of, let's say, different things in your face. Yeah, the raw spreads this and raw spread that, and then you look at 11:59 p.m. when the market changes, when the day changes. Basically, you look at I don't know, 200 pip or 150 pip spread on certain assets. For me personally, considering that I have, and for Stefanos as well, considering that we have position running overnight, we can't take something like that kind of a risk into association. So in regards to the master, there is a trust with the broker. Simply because we've known them for years and we've got introduced to the MLM project through them. So it's a win-win situation. When you know as a fact that the broker has, it's in its best interest to give you the perfect service in a way in regards to the trading, the execution, and so on and so forth, then it's great. When you have a little bit of a conflict of interest in the middle, there is always that big question mark. So of course that was very, very important.
I agree. Okay, great. So I guess we can turn to the next section of this call. Let's call it just questions. So
yeah, if you guys have any questions,
yeah, you can just ask.
I should stop sharing my screen for a second, unless.
So guys, if you just have any questions, just type it here in the chat. I will read them. It's the most easiest way. No questions so far? I guess you are just pumped. Okay, anything? No. Great. So
good.
It seems that your explanation of everything and the trading statistics and so on was so impressive that
that's a first for me to be honest. For me to be
honest. So maybe Eugene, maybe I can say something. Alex, I will say you. Thank you very much for your great words. I think for our partners, it's very important to see that trading is more than just set up a trade here. This is the most important thing for me, especially because trading needs a lot of experience. I like your style. I like how you work, how you analyze a trade, why you place it here and why you place it there. This is very, very nice. And it shows the difference between what Eugene says, some groups in Facebook and other things. So it's easy to trade. So it's very.
I can tell you now. It's very, very hard. I can personally tell you it's one of the hardest professions known to man. Because you don't have you first of all, to be a trader, you need to have a very good balance between your personal life and your professional life. It's extremely time enduring. And if you don't like it, if you just do it for the numbers, just because you know as a fact that you can make money for it, you absolutely will never do it. You need to definitely like it. And the most important fact is not the strategy that you use, it's the risk reward ratios. It's the maximal drawdown. So the first question as an investor is like, it should be, okay, what's the risk appetite? How much am I willing to lose, one, as an amount, and two, as a percentage? Even when you buy an apartment, right? Because I've done supply and demand and balance analysis for many mutual funds in my past. And before you purchase an apartment, you're always going to look at a few things, right? Inflation, you're going to look at the market within itself from a geological perspective, and so on and so forth. And of course, you're going to put some numbers on it. One is going to be if you don't live in it, if it's an investment, is one, the rental yield that's going to create you on a yearly basis, which is usually what, 5 or 10%. And two, what kind of a risk, or what is your risk that particular property will devalue to under 5 or 10% within the next, I don't know, 1 year. If those two boxes are ticked and you're good and you know that you don't, then you're going to make to go for it. That's exactly how I look at trading as well. So I look at my risk first, and then I assess my targets according to that particular risk appetite. So that's very important.
Perfect. Thank you very much.
No worries, guys. It's been a pleasure. I will let you go, and let's have another webinar towards the end of the month if you guys wish.
Yeah.
I'll have Steph's there as well.
Definitely, and I will hook up also live accounts, and yeah, this is how we work. Absolutely. Great. All right. So yeah, thank you also from my side. I wish everyone to a peaceful rest evening. We have still, I think, in some regions the sun is shining. So yeah, thank you for attending. Have a nice time, and see you in the next call. Your BCI team.
Thank you, everybody. All the best.
Bye-bye.
Bye-bye.